Hello, everyone. So this video intends to explain what is the UniRenko and how we set it up for it to show us price ranges in a chart instead of time type or time bar type charts. So let's go ahead and look at it. So I'm gonna take all the indicators off, so that way it's easier to show. So I'm gonna just leave a couple of them in there. So you have here the um, moving average 34 and 18 painting in red here. So the upper side is the 34, the lower side is the 18 EMAs both. So let's go to explain what it is. And for that, first of all, I'm going to show you how to download this here. So you go to show all and then type UniRenko in the ecosystem for NinjaTrader. So you will see that there, it's not an indicator, but it's a type of bar. So you go here to the UniRenko Universal Renko Bar Type 8, and then if you click there, you would have a download button here that you can download. And then you install this one, import it into your NinjaTrader 8, and that is what the one I use, and then you install it. Okay, so there's an explanation on how to install Ninja Trader indicators and add-ons right here in this page. So, all right. So let's go ahead and show you what it is. So this one is a 4. Let's go and look at this here. This one is a 4. So tick trend is 4. The open offset is 10, and the tick reversal is 20. So what does it mean? I consider this one a large bar. So basically, what you have here is a tick trend 4. So meaning that let me go and paint it with this. So this bar here get a close around that level, right? And then the next one would get a close around this level here. So the distance in between this upper close and this lower upper close, it's going to be 4 ticks. So that means that in this case, 4 in 4, you would have that distance in between the two of them. So that is called a tick trend. And you will see that that one there is this value right here. It moved to the other side, so I'm going to correct it and then probably do it with a different. I'm going to do it like that. Okay, so 4 is that difference in between these two values right here. Okay, now 10. What is 10? 10 is the open offset. So that means that the difference in between this upper side here, I'm going to paint it again. We're using the same tool. So I'm going to put right there and then down here. So the difference in between this point here and that point there is 10. So the 10 ticks. So that is the size of the bar itself, or the size of the break itself. So you have 4 here, 4 there, and then this one is constant. This distance in between the higher end and the lower end of this break is 10. Now, that doesn't mean that the price goes all the way to the bottom side of here, right? So what happened is that when you reach 4 ticks up and then creates a new bar, this new bar is going to be 10 ticks large. So this one is going to be the size of 10 ticks. Okay, so 10 ticks there, 10 ticks there. But that doesn't mean that the price came all the way down and touched this one. Now there's a wick, which is this bar or this tail that you see here, right? So that is called a wick or a tail. Okay, so this tail, that represents the price actually that goes above the bar, right? So for example, this one here opens right here 4 ticks above this or below this bar right here, and then the price oscillated into this price up here, which is a little under 80.30, so 80.28, let's say, and then came back down and closed beyond or closed at this price here, and then moved 4 ticks to the downside. Okay, so in this case, it doesn't open just when it move. Well, it open a new bar when you open here, but it goes 4 ticks all the way up, and then if it goes in the 5th tick, it's going to create a new bar. Hopefully that makes sense. So so that is the wick. The wick goes there. So in this case, for example, in this case here, the price went up, created this value right here, reversed, and I'm going to explain what a reverse is, and then went up and then create a wick, a tail below this break, and then moved up again and then created another one, right? So what is the tick reversal then? So the tick reversal is measured from this high here. So for example, I'm going to put another, I didn't want to do that, this one here. So here is a close, right? But to get a reversal bar, which is this one here, right? Then the price needs to move in between this value and this value a level of 20 ticks in the reversal. So this one is what I call the large bar 4, 10, 20 for the UniRenko small bar or large bar. I'm sorry. So right here you have this value. It's gonna probably, oh, okay, they did it well. So it's going to create a new reversal bar when the price reaches 20 ticks down there, and then when on the 21 tick is going to go below. So one bonus I'm gonna give on this one is about stops. How do I treat stops? So there are 2 ways. The first one is what I do normally is to, at the first reversal plus 1 tick, then I close the trade. So it goes from when I would open it here above this value here. I'm gonna point it with this dot here. So when the price goes to that level, I enter the trade and then start moving up. If it reverses on me and creates this this one here, when it is 1 tick below, then it's going to close the trade. Now the other way is to create and leave the price static, or the trailing just on the stop, not trail the trade. So you enter it here, goes all the way up there, and then you put a stop right there. Okay, so in this case, this is a reversal trade, so probably it's not. This is a better example if we do it with the trend. So let's do it again. So we are in a bearish position or in a bearish bias. So I would enter a trade right here. This is a week out of the moving average. This is actually an 18 moving average, and it's weeking out of this cloud created by these two moving averages, and it's red, and momentum is a little bit extended, but it's okay. Now, so you enter it here, and then you put the stop right there. Okay, so in this case, the stop is going to be okay, again, let's put it right there around that area, just one tick above this tail. Okay, so you enter it here, you put the reversal is going to be, or the stop is going to be 22 ticks. So 20 ticks on the reversal plus one tick you enter and one tick you reverse is 22 ticks. So that is the first stop. And in this case for CL is $220. Okay, so you're risking $220, and then the price starts moving in this direction here. So you get there. You get the stop, or you get the target, and so you have 1, 2, 3, or 1, 2, 3, 4, 5, 6. And this one you get the target right here. Right there is the target, and then reversed on you. Okay, so you if you have one contract, then you would reach the target. Now, if the price comes here and then reversed on you, let's see. Let me close this one and look for a stop. So the advantage of this method here is that if you enter it for the in the short side, then your price or your 22 ticks are going to be right here. And then if it moves here, you can move the stop right there, and you haven't been stopped out yet. Then there's some consolidation or some compression area right here, and then you would move your stop. If you see two bars to the or two bricks to the other side, then you move the stop. Like you have 2 bars here, and then you have 2 bars here, and then you have 2 bars here, and then you have 2 bars here. So you move the stop basically from this here to here to here. There's no 2 bars together or 2 bricks together right here. So you get there, and then you have 2 more here. So you put it here, and then you have 2 more there. You have that one there, and then in here you would be stopped out 1 tick above this one. This is what I would do. I mean, you can give more room to it, but this is what I would do. And then at the end, here, you would be stopped out there. Okay, so that is another. In the other mode, as soon as it reverses, it takes the in this case would take the, I change the color here. You take the exit right here instead of waiting to go all the way up and may probably cross it. So that would be the difference. Well, so let's go back here in here. So that would be the explanation for the UniRenko bar. Now I do have 2 sizes basically for ES, or yes, ES gold and crude. So it's going to be the large bar is going to be 41020 and the small bar is going to be 2510. So that is what it is on that one. Now in NQ, the small bar, I'm sorry, the large bar, the large bar is going to be 82040 and the small bar is going to be half of that. So two or 4, 10, and 20. That is how I use it. Now you can choose a different combination in between them, but I thought that, well, for my case, this one is probably the best one. So 8, 20, and 40. That is the large bar that I use in NQ. NQ is a little bit more volatile than these other two instruments or three instruments, ES, GC, and CL. But I think that this size is good. All right. So thank you so much for watching and hope you like the video.